So obviously, Crystal, there's some sort of payoff here, but have you sensed any amount of cooling in the willingness of investors to lend money to Chinese tech companies in the midst of not just these protests, but obviously a U.S.-China trade war?
We're seeing quite the opposite, in fact, in the private market. We have seen that the technology startups in China are tapping the syndicated loan market in a really unprecedented pace. A lot of the Wall Street banks are taking their U.S. playbook into China, lending these startups billions of dollars in hope that they would get further mandate in the future, such as IPO and equity follow-on offerings. Well, what we're seeing from this particular protest in Hong Kong did have some impact on the market. We have seen that trade has caused some of the IPOs to pause. They have decided to wait until the environment clears up. It's still unclear. No deal has been pulled because of this extradition protest, but we should monitor very closely whether these companies that will be looking to go public in the next 3-6 months will change their mind or have any sort of other contingency plans.
Now, these companies may have a lot of potential, but they're asset light, they're unprofitable. So what is the attraction for investors?
Investors are really looking for high growth when they look at Chinese tech companies. That's generally the theme for tech and China. As you said, these are asset-light companies. They don't really have a track record of profit making, but it's not really an unfamiliar notion because it's happening in the US for a long time. I think Wall Street banks are really looking at this as this really good opportunity to build relationship early on with these companies, and in hope that further down the road when they go public and become like $1 billion company, they will get the mandate for more lucrative fees.
So give us some examples of specific deals. For example, your story, you mentioned ByteDance, certainly a big and growing company, but also a company that's run into challenges, specifically with the U.S. government.
Yeah, so there are several companies that have raised big loans in the past. You mentioned TikTok, which is a really popular streaming app. They have raised billions of dollars, and that includes a lot of big names in that deal, including Goldman Sachs, Morgan Stanley. We've seen that some auto financing deals, such as Squads.com, they've all raised big tickets. I guess what this is probably the trend to be, instead of raising private equity where you would dilute investors at a lower price, you're raising private loans instead. So you keep that valuation and you still achieve the goal of raising funds for further growth.
We've seen many U.S. tech companies wait to go public, wait many, many years to go public. Is that the trend with Chinese tech companies as well?
It's increasingly going that way. TikTok has been TikTok's mothership. ByteDance, they've been talking about raising fund, but nowhere close to being public yet. We've seen the other big unicorns, such as Alibaba's financial affiliate Ant Financial. They have been private for the longest time. So these are the really big leading tech companies in China. They're really taking their time instead of rushing to the public market like their other peers in China.